Hi, Warriors. How's everyone doing today? Sinatra, Mike. Hope everyone's okay. Pulling some pips out. Brand's on his phone again. Marcus, how are you? James, AJ, Patrick, hi, Kman, and Ryan. And happy hump day to you too, Blake. Hiya, Paul. Okay, so we've had this recovery after intervention. I haven't done the fibs on it, but just eyeballing it looks like 61.8. Why don't I start off with Ryan? Good morning, Ryan.
Good morning, sir.
So let me ask you, buddy. BOJ, the authorities in Japan looking at this recovery after they spent billions. Probably be smarter to come in again here before it made a new high, wouldn't you think? Come back in and back it up?
Nope. Why
No?
why hit it now? Waste another 30 billion to have Powell come out all hawkish and send it all the way to 160.
Okay.
They don't they don't trade data points. They don't intervene on data points or
Okay.
events.
All right.
It's the speed. Look at the 155 move originally. Pretty much straight up.
Yeah.
This one
Right.
this one's on the grind, and
Right.
they can't influence the Fed, NFP, ISM, or any other US data. If it's strong, it's strong. The dollar's going to go up and take dollar yen with it. But if we get to a situation like we saw Monday night, where you get yen moving and nothing else is, that's when they'll sit up and look to hit it. But it's also another bank holiday Friday through Monday, so it's a long weekend for them again. So we might
For
get shenanigans.
Japan?
Yeah,
Okay. So the Dixie didn't quite take out this high. I think it went right to it, 51, and here it was 49. So you think there are a few stops over these highs here?
should be.
And yeah, and the question was answered. Why is a Dixie giving shorts 3 weeks to build up a position? And the answer is so that when the stops are taken out, they have liquidity to take profits on their longs and sell into the market. Um, so, there's still probably some bears alive if they didn't have their stops here. Think we're going for new highs?
It's possible. If you look at yields, they're getting a little bit twitchy. That 2 years above 5.5% now. But this is probably just the market leaning a little bit too hawkish again, going into an FOMC.
Yeah. Okay. Well, I know that the TLT, I didn't trust it closing in that wedge, and it was right to not trust it. Um, Here it is. So we're back, in here, and I have a little three driver will happen here, and I'm hoping that's going to be the low because we don't want to see a three drive on the weekly, do we? Under 82. So we'll see. I was thinking 87, 86, 10-year, you know, are we going to fail here? This is right around 474.8, uh, 78.6. So we've already been there. Well,
Yeah,
73.9. So we're either peaking here or we're going to blow to new highs for a three drive. Either way, I think there are shorts setting up. I'm going to key off the TLT, uh, looking for at least this wedge line to be tested at, looks like about 87 down here. Let me look here. Happy hump day, Marcus, and happy May Day. What is May Day, Ryan? Is that celebrated in Russia like it's a day to celebrate the working man?
yeah. It's a Labor Day, so a lot of countries
Oh,
off.
Okay.
Yeah,
Unions.
you have your own Labor Day, don't you?
Yeah, but I think that's a great idea. I think that traders should unionize so that we have guarantees against our losses, and we can only the only trade and the only trades that count are things that are profitable. Who wants to join?
Of course.
Raise your hand if you want to join
Yeah.
that union.
Membership is $10,000.
You're right, and we'll mail you your your trading capital.
Yeah.
You don't even have to earn it. God bless America when we have a union like that. Anyway, uh, let's talk about risk. So, real ugly day yesterday. Um, can we hold here for another rally attempt? I was looking for 1.5. We didn't quite get there, but that was a pretty ugly day. And most of the leaders, even Amazon, look at the after hours action in Amazon. Look at this wick. So, who do you think got chopped up trading Amazon in the after hours? You think some people, oh, I better get out down here. No, it looks good again. I think I'll get long. New highs coming. And then the next candle's here. And the right thing to do was to stay out of aftermarkets. Don't trade those aftermarket moves. And also the bid offers aren't that great. So, what do you think? Let's go to Kman. Risk.
Hi, Dale.
Hey, buddy, you risk and trouble here. Okay,
Um,
are we starting something like this from
yeah, you know what?
here?
I mean, there's a few things that happened there over literally 24 hours. Was that everything was cool and relaxed, and then all of a sudden, sorry, I've seen protection against the upside on the yields ramp higher. People wanting to buy protection on the downside of risk, which is equity markets. Then we have had a bit of a month end in the mix, and all of a sudden it looks like a bit of a panicky situation going into the FOMC and perhaps even the end of the week. The end of the week. What is that? Easy.
Oh, it says easy to sell vol.
Ah, okay.
I wrote that when it was going up here. I haven't,
Okay.
it's like my spaghetti stuff. But anyway, I did talk about buying the VIX yesterday.
Yeah, so we had
Decent
a
start. Go ahead.
Yeah, so we
Yeah.
had this big reversal in risk and in bonds, and apparently there's been an absolute big amount globally traded to the downside in bonds and the downside in equity markets. It's I think the pendulum again, if it's just ahead of the FOMC, it's pendulum swinging again, and I'm still not sure that Powell, okay, he has to be hawkish, but because of the data, but I'm still thinking that he's going to try to walk both sides of the aisle as he usually does.
Yeah.
We have to be careful. That's what I said on the Flow Show as well, because we know from his press conferences that he likes to walk one side of the spectrum to start his meeting with, and then gradually move over to the other side. So we need to be a bit careful for saloon doors later today as well. But I've got this feeling that he may send us over straight to the jobs report. If that report remains strong, then I think there may be a bit of dollar wrecking ball being on the horizon. But we never know. It's still a lottery how this report will come out. Yeah, it has to be hawkish, but he can use a couple of things to not come over too hawkish. Let's say that he says higher for longer, okay, but you will have to break my leg to hike higher for longer, but perhaps do something about QT, putting plans forward. I still think he's going to try to walk both sides of the
Yeah.
spectrum, not to let the market overheat too much, but that's just
Okay.
my view.
Well, under 80, I talked about this $80 level being
Uh,
important. Here we are on WTI. Does not look great to me. So you know, maybe we're going to have this.
Again, the same thing. You have a
Yeah.
period of strength, and then all of a, and then it's like spends the next few days, weeks to lose it all again.
Yeah, yeah, that's a bear
Middle
market
East probably
action.
calming down a bit in the mix as well, same as on the metals, you know.
Yeah, the metals, what was the low in silver yesterday? I think it got down to near your number.
26.30 or so, 26.28.
Yeah, that was what, and you pulled your order. Did you get back in?
Well, I
Did you?
did buy on the fixing.
Okay. All right,
I'm front running
26.27.
Stelios. I hope he won't mind.
Okay. Yeah, he won't mind. So the gold silver ratio again, a day even when gold's up 10. You know, is this it? A, B, C, and we just go. But the platinum's up 15. So in a matter of, I don't know, 3 days, that spread long platinum, short gold has performed pretty good.
Mm-hmm.
So, you know, I think that it's embryonic. So we'll see about that. How about back to Ryan on Euro Pound? I said, if you think, I tweeted, if you think the 85 level is going to hold, I have some cubic zirconiums for sale for you sweethearts. Uh, what do you think? You want some cubies?
I'll take some cubies off you.
All
Definitely.
right,
Most
all right.
definitely.
Anyway, well, it should rally. I mean, this is a pretty good break in a matter of, you know, 5, 6 days.
Yeah.
Maybe rallies back to 86, but you know, this is kind of a sign that
Yeah, we
even
sort
though,
of two levels. We got this 20-30 area that
yeah,
it's bumped off enough times. I mean, I probably could have traded that 15 times more than I traded 85 and made
yeah,
money. But it's like the first line in the sand before you start to trouble that 85 handle. But yeah, still, I see no reason why this breaks down unless there's a big fundamental change from the Eurozone or the UK, either central bank. This one might go on a bit of speed between euro, dollar, and cable over the Fed. But if that's the case and we test 85, I'll be there with my fishing net.
okay.
Hey guys, good morning. Just want to remind you we have ADP data due in about 3 minutes or
Oh,
less
go
than.
ahead, Blake.
All right. Sorry, I didn't want to interrupt. I just know
No,
that
no.
we got this data coming out. And how you doing today, Dale?
Good, buddy. How about you?
Good. All right. So I'm gonna pull up data flash here in ForexAnalytix. Remember, this is how you can, see the data as it's being released. Usually it's very fast. Sometimes I've matched it up against Bloomberg, and it comes out just at the same time. And I have to the left dollar index. We have 10-year yields right in the middle, and then S&P reaction off to the right. I guess I just wanted to say this morning, I was listening to you guys talk and specifically about the Fed. Kman, I agree. I mean, going back to your comments about the Fed chair, he's I can't see any reason for him to be not hawkish today. Like, but is he gonna? I think everybody's expecting that. So can he raise some, eyebrows as far as maybe growth goes? Maybe that becomes a concern. There's things that if he puts any type of question mark in the market, I think that is going to have that's going to have a positive effect on stocks, and
How
it's going to have
about
a
throwing the market
Oh.
a bone by ending QT?
Well, maybe that's it. I mean,
Maybe.
I just think that I think everybody's really leaning into this market thinking that the Fed's going to be this, super, super hawk is there something that can derail that and keep stocks very well supported? I don't know. It's just we can continue this conversation here in a few minutes, but once we get past the ADP. But yeah, I'd love to hear you guys' thoughts regarding that. One of the other things too, I don't know if you saw this, Dale, crypto is breaking down.
Yeah.
Well, Bitcoin, broke down some really key support overnight. So
Descending triangle.
yeah, it is just big range, and thing is, it's got a false breakout too. So here we go.
Mine too.
Big beat. Yeah. So nothing bearish about that. Nothing bearish about that. Limited reaction in the market. The dollar's, caught a little bit of a bid. We do have ISM today. Ryan, any thoughts about ISM services data, or excuse me, manufacturing data that we're getting today?
No, obviously being a Fed day and a jobs week as well, keep an eye on that employment number. It's in the negative at 47.4. So that'll be, if that's another stinker, that will get people talking about Friday's NFP. And just the prices paid number, which is currently 55.8 for the inflation look for the Fed. Just keep an eye on those two, probably.
Gotcha. All right, just real quick so you guys can see. I mean, this is the Bitcoin chart that I think is probably, well, the reason why this is so important, in my opinion, A, we broke down, obviously, but B, it's more of the breakdown of the longer term like false breakout here above the highs. That's the bigger problem that I see with Bitcoin right now. And so that's one thing that I think that if risk does sell off, you got to think that Bitcoin's kind of leading the charge at this point. And remember the halving last week, everybody was getting long crypto ahead of that, and it's just been nothing but straight down since the halving. So, I think that's another thing that's weighing on the market. All right, let's go back to the Fed, because the Fed's obviously the key today. So let me hear what you guys have to say about, and we heard a little bit of Kman, your thoughts, and we can circle back to you. But Ryan, what are you thinking about the Fed today?
Not much more than what I said to Dale earlier. The market's going in a bit hawkish. We all know that. So that's the balance of risk, that he doesn't live up to that hawkishness. And if he doesn't live up to market expectations, you're going to see the dollar probably lower and yields probably lower. But then you've got to look right back at the data and say, is that the right move for the wider picture? And that wouldn't be the right move for the wider picture, because inflation's done nothing but stay sticky and in some points gone up since the March FOMC. Their ECI, employment costs, wages thing, that's gone up in Q1. So that every data point is showing less confidence for them in inflation coming down, and the market's going to be mindful of that, whatever Powell says tonight. And if he is full tilt hawkish, well, yields are going to blow, dollar's going to blow, and off we go to the races. But I'd rather buy a dollar dip on a less hawkish Powell than try and sell a rally.
Well, okay, so that brings up a really good point. I'm just gonna read you guys the analysis from the dollar index, and I want you guys just to maybe comment on this and think about this. Not the DAX. I would pulled up the DAX, not the dollar index. Let me find the dollar. Let me get back to it. Here it is. All right. So, as far as the dollar index, what we've got this double top that's obviously setting up against resistance. Now, the fact is that we got a bull flag pattern that's, attempting to play out. Obviously, a break above 106.60 is extremely bullish. But we could also set up for a good reversal here, and then you could argue that the dollar is going to go down. I think it's a very pivotal day for the dollar. So when you're looking at the dollar as a whole, I mean, you look at the euro. The euro's trading heavy. It's below 107. You got the yen, which looks like the market's hell bent on testing the resolve of the Bank of Japan and Ministry of Finance this week, and seeing if we could push back above 160. I mean, Kman, how do you feel about the dollar here, when you're sitting up against these highs?
Yeah, so what I was saying on the flow show in length as well this morning is two things can happen over the next 3 sessions, because I'm going to take really the NFPs together with everything. Is that to me, I think the market is now preparing for a potential dollar wrecking ball to continue, and perhaps the pendulum swings a little far for what the FOMC is concerned. But if he doesn't give anything to the doves today, and we get yet another NFP report, which defies the laws of gravity, then the dollar could really get to be in wrecking ball territory again now. If he, because he can hide behind a couple of things. He has seen those, although the labor cost index went the wrong way as well, but the consumer confidence dropped quite a bit. And then he can hide behind, yes, but we should be starting to taper QT a bit more actively, that to counterbalance what he has to do on the hawkish side, because there's no two ways around it. The data has been hawkish on, or I mean, sticky on inflation. Even some of the reports are still pretty upbeat for the US. So that's the FOMC. I think could be like really, we could visit both sides of the range today, on depending on what he says. We can get back to 107.30 if he says anything dovish, but then we can equally first drop to 106.20.30 and then do the recovery when he says something potentially dovish. It's as I was saying, I'm very cautious going into those 2-3 days. I'm traveling extremely light, and I'm more than happy to, for once, react instead of front run the events.
You know what's really interesting about you saying that, and Dale, you're going to find this one really interesting. I am going into the FOMC flat as a pancake. I have not had positions on since yesterday morning, and I don't do that normally.
This is a rarity.
This is a rarity. Usually I've got some sort of feelers on. I've got,
It's
like some sort of
eclipse.
Yeah, it is really bizarro for me to go in like completely flat, and because I think it's a pretty big day today. I really do. I think I think the market, and I'll reiterate exactly what Kman said, and I agree 100%. I'm more than happy to react today. As I did the week ahead video this week, I told you guys that, it's either a breakout above 106.60 or it's a breakdown below 105.10 in the dollar. And I came in really agnostic this week. That's exactly what I said on, over the week ahead video. And I'm like, and here I am ahead of the Fed, and I think the dollar could go in either direction. And I'm not married to either direction, although I agree with Kman's wrecking ball, because I'm going to give you guys a really, really great setup for those of you that trade the Noki. This is, in my opinion,
highs, isn't it?
Well, yeah, this is you talk about the dollar wrecking ball. This is the US dollar, Norwegian krona, and we have the Norges Central Bank on Friday. So in the event that the dollar rallies today, let's just say, we get this, super hawkish, Fed, we walk away today going, oh my God, I don't know if the Fed's actually going to cut rates at all this year. If the market walks away with that attitude, A, equities are down today. B, the dollar index is significantly stronger today, and we start breaking out above 107, 106.60, 107. What that sets up is the US dollar, Norwegian krona, going into a Norges Central Bank meeting on Friday morning, Thursday. Well, it's late Thursday for us, but it's Friday morning in Norway. And look at this massive. This is the high that was post lockdown from COVID. That was that generational high that I would never think gets tested again. But look how strong it is. You talk to people like Stelios. He's like, I don't get it. I don't know why, the Norwegian krona is so weak, but it is. And the fact is, if you have the Norges Central Bank that looks like they're going to lean dovish anyway, and they're going to set the market up for some rate cuts in the meetings ahead, and then you got the Fed going the opposite direction, you're going to have a breakout in this US dollar, Norwegian krona back up towards 12, basically towards channel resistance. Will be somewhere up here. So this is, like, you talk about a wrecking ball. This is the wrecking ball on my radar at the moment. And
look,
yeah, I don't have any position there, but I'm more than willing to be in it. I'm just kind of waiting on it. Kman, I know you follow Norway fairly closely. Do you have any thoughts here?
Yeah, totally. And yesterday we had the Norges Bank adding a little bit to their Norwegian kroner daily sales. Just not much, but just the fact of them adding a little bit to it is going to keep the Norwegian kroner on its toes. It's had a very limited, initially decent, but then in the end a very limited reaction to higher Brent prices as well and gas prices, and it's coming back off it relatively quickly. So yeah, I was looking at some stage to try and buy Norwegian kroner because of the energy, because of the contracts with Europe, but then it just doesn't work, and it's rather looking to the other side again now.
Yeah, that's exactly the thoughts that came from Stelios over the last couple of months. He's just like, you try to trade that correlation and it just has broken down. It catches no bid, no matter how strong the energy markets are. I want to real quick. I just need to reference a couple of things. Dale, I know you might have talked about this already, but I'm gonna talk about it just before we leave here. Amazon's up right now. It's up less than 2%. But I don't know if you guys saw SMCI, or remember the Wall Street's darling. We're down 10-11% right now at the open. So we're gonna open up pretty low. Look at AMD. These are from earnings from yesterday. AMD is going to open down like 6%. I know. I think MasterCard just reported was down a little bit, but take a look at some of these tech stocks. They don't look so hot. And then I was looking at this chart. Whoops, I didn't mean to hit my microphone here.
All of the Mag 7 look like they've broken.
Yeah, that's the thing. And you look at like FANG, which is not as popular as the Mag 7 anymore, but look at it's right at a breakout point. I mean, it's barely holding on there. So
I looked at all sectors yesterday. Okay, and to try and find a good pattern, I couldn't find it. I looked at banking, XLF. I looked at copper stocks. I looked at Deere and Cat, and I couldn't find the sector, even oils now, which were a leader. The semis look lousy. I couldn't find a good-looking chart anywhere. I don't know what's going to pull the market out of it. I'm not saying it can't bounce, but I can't find leadership.
Yeah, I'm with you. I don't know where it's going to emerge from, but the market does look, let's just call it vulnerable. And maybe the Fed saves it today. Maybe, and oh, here's one last thing I want to talk about really quick, and then maybe get some final thoughts from everybody. I'm looking towards Friday's data, and I got asked this question yesterday, and I elaborated in the ForexAnalytix chat room. If you guys are not in the ForexAnalytix chat room, this is the conversations that we have throughout the course of the day inside our chat room. We're just talking about markets, everything that's moving, yada yada yada. Yesterday I got asked a question about the jobs report, and I am very much in the camp that weak data is not good. So if you have a non-farm payroll jobs report this week, which we're going to elaborate on this over the next couple of days, especially post Fed today, but the market's looking for 250,000 jobs, and forget all the other like minor data, but let's just talk about the headline data. The headline data, if it comes in weaker than expected, you might see a lift up in risk first. People go, oh wait, maybe the Fed's going to cut, sometime this year. But weak data is weak data, and I think that if we get any type of spike higher on weak economic data, you can even lump ISM in there today. You probably need to sell into that rally. I don't think that weak data translates into strong stocks anymore. I'm in that camp. Ryan, do you have any thoughts about that?
It switches on and off, doesn't it?
Yeah.
Earnings were coming out pretty well. Now we've had a few ropey ones, so stocks have been lower. Now we've got the Fed coming up, and I think you've got to go with the same old. You've got to go with the same old trade. If Powell is a bit more hawkish, stocks are going to dump. But does it mean they're going to wipe out and the ball runs over and we're heading to 4,000? No. So I think you've got to still look to buy the decent dips against support.
Yeah. All right. Okay. Kman, last minute thoughts before we pass it over to Dale.
No, I said pretty much what I had to say. There's one currency that I'm still quite interested in. I'm still a bit long as well. It's Euro Swiss. It's on the move. We've also broken 91.5 on the dollar Swiss, but we're coming into an interesting zone on that dollar Swiss in the mid 92s, which is around where we were when starting, the dump into the year end, and I've also got a FIBO up there, and it's an interesting zone up there. So that's your next level that needs to break for dollar Swiss to continue. So for the time being, I don't have any, but I'll keep a very close eye on it. 91.5, 91.35, the underside. So
it's been the trade of this year, and I know a lot of us have been leaning just short Swiss as much as we could, but you're right, it is really up against some major resistance here. So it's kind of like do or die time for the Swiss franc. So let's see what happens. And I think one thing that does worry me is geopolitical risk. They tend to give the Swiss a little bit of a oomph. So anyway, hey, I know Gary's here to meet with Dale. So I want to say thank you everybody for tuning in today. Make sure this is a perfect day and really a perfect week to be involved in the ForexAnalytix community. Jump into our community. It's $1. Download the mobile app, jump on the desktop app. You get all this information, all these special tools. Up on the right-hand side, it says go to chat room. It's next to your username. Go into the chat room. Come with us and chat in there. We don't talk politics. We don't talk religion. We just talk markets. And if you try to sell something, we'll kick you out for infinity and beyond. So it is very much a very clean and very respectable chat room. We all have just great conversations in there. No trolls, zero trolls like you get anywhere else on the internet. So anyway, you want to talk with like-minded people, be there with us, because this week is going to be a very busy week, obviously, from today forward. So with that being said, Dale, it is all yours, my friend.
Okay, let me just compress what Blake said. Make May pay. Do it.
That's right. Make May pay. I like it, Dale.
Make May pay, bro. And someone who I haven't talked to in 3 months, and I love his enthusiasm for the markets, and he doesn't pull punches, is my friend Gary Kaltbaum. Welcome back, buddy.
Greetings, good sir. Can you hear me?
Got you loud and clear, Gary. So, this pullback we're getting recently, a few weeks ago, my target was an obvious 4,800, the breakout in the S&Ps, and I'm getting a lot of agreement on that. Makes me think it's going to be deeper. Where's your head at? What's a state of play for you and your people?
Okay, well, first off, I'm a big believer that the market's going to want to do what it wants to do regardless, except until Jay Powell, I thought that was correct. But when you have the ability to wake up one morning and print to $9 trillion, taking over the whole bond market, screwing every saver, creating distortions and inflation, who knows what he can pull out of his hat today. That said, all things being equal, everything pretty much sets up for lower. Simple as that. And if we go back to, can we see the charts here? Just making sure.
We got it. And, Gary, I was just saying yesterday before I did a show, I went across the board. I looked at financials. They looked heavy. I looked at things like cat and deer. Copper stocks have been leading the way. They look toppy. And we all know most of the Mag 7 are already broken stocks. So I don't see any leadership in this market. Even the oils look like they could go lower.
Well, restaurants are strong.
Okay, that's a group I didn't catch, but
Okay.
yeah, you go and cannabis.
Oh, weeds, very strong. Thank you to
Yeah.
the government for wanting to get more people stoned as they put us into more debt. Gotta love them.
Wow, man.
Okay. So let me just do a few things
All
here.
right.
Back in July, we had 3 legs down, which is kind of normal for corrections. We have no idea if that's going to happen next, but of course, if you
Yeah.
take this out, that would be your second leg. But what I want to show you real quickly is here is the China ETF. And
Okay.
we don't know how it's going to play out. All we know is how it's been playing out. And just to show you, bear phase gets back above the 50, retests, moves up, retests, because you've got to, work off the resistance, sits around and finally moves above this. I don't know if it's going to work. I don't know if it's going to fail, but that's how bottoms occur, where price gets back above, the 50-day flattens out, starts turning up, and then starts going this way, and every pullback is contained this way.
Yes.
Simple as that. And we're showing pictures here. That said, the S&P is uptrend, breaks the 50, rallies into it, sells off. The complete opposite.
Yeah.
And
So is it a layoff trade? Is it a negative correlation to the U.S. market? Because you're right. When we were going up parabolically, FXI was under pressure.
Yeah,
And
go ahead.
what do you think? No,
I don't
what do
know
you
if there's
think?
I don't know if there's a correlation between the two. I'm just trying to show you what
Yeah.
a top looks like and what a bottom looks like, notwithstanding, hey, who knows what's next? So a few things to show, and you mentioned a few of them already. Number one, these are the transports.
Yeah, we have a
And
Dow theory sell, don't we?
Yeah, I'm not the biggest Dow theory guy, but I am pretty big about what the market's trying to say and what it's trying to do. And let me just show you a few transports. This is a trucker, SAIA, and we're not talking about drops. We're talking about massive drops here. Here's JB Hunt. Here's Old Dominion Freight. Here's this one yesterday, ARCB, Arc Best. I mean, they're destroying them. They already have a bunch of the rails. Here's Norfolk Southern. We're talking bearish phase in the transports, and if they matter, I think it's of import. Next thing, I definitely had a show because, oh man, at the highs I was getting 100 emails on it. The crypto looks like it's top for now. Very simple. Here's the rally, flatten out, break, wedge along, now getting below here. The high octane and micro strategy has a bigger top in place. We think maybe it's the risk on, risk off thing. I don't know, but I'd be wary of the crypto. Simple as that. Next, you mentioned the oils. Here's the OIH, drop, wedge,
look at that.
break the 50. Here's the XLE, drop, wedge, roll over. The XOP, these are the 3 ETFs, and just showing you. And again, we're talking about here and now. I have no clue what happens in November. That's the oils. Gold, I sold mine yesterday, breaking the 21-day, which means it'll probably be up $5 today.
Gold's up 10.
You can see why this looks like the SOX and NVIDIA at the tops in March 8th, where reversed gaps goes like this, but gold's a different thing. And then I want to show you the SOX and go back. I don't think I was on after March 8th with you, but on this day, I just simply said, I said, that is not going to be taken out anytime soon. That is a major exhaustion reversal top, and that's what we're getting. The SOX with this amazing V-shaped move up. I was like saying to myself, is this possible? And you can see rejected yesterday with pretty much everything else. NVIDIA, which is the head honcho top dog, big cheese, I got 100 emails. Oh, it's back above the 50. Should I buy? I said, just sell if it breaks back below. But it still has that in place. And of course, you have other things in the AI space like SMCI, which will be down about $80 today in here. Big wide and loose top in here. So you got to be, and that's the break. And the other thing is the volume patterns. Heavy volume down, light volume up. You just got to just be very careful. I want to add in the advanced declines on the NASDAQ while the NASDAQ was doing this. Just tells you it was going into the mega caps. And then, as you mentioned, the mega caps, well, there's some issues with a few of them, not all, but a few of them. And just of note, there's your AMD down another 10 today. Apple, which reports Thursday. What I'm amazed about Apple is the last 2 weeks, they ramped them up twice on news and upgrades. And look how easily they sent Apple down. That was never the characteristic of Apple during bullish phases. So maybe they'll pull something out Thursday. I don't know. But let's just do some other big names that I follow. Booking Holdings, don't break the 3,400. Costco, Toppy, don't break the 700. Salesforce.com looks like a bearish flag. Meta, the only thing I can say good about Meta, by the way, we sold it here after buying it here. The only thing I can say is you got this gap here and maybe this reversal, but that's on defense too. Netflix gaps down, Oracle gaps up, and miserable failure. SAP, some people don't watch that. I do. Gaps up, fails. Tesla, okay, they said some things and maybe we'll see, but here's your Tesla weekly, and I would suggest that has a lot of work to do. And then there's puzzling, Microsoft. They gap it up into the 50. They close it here. Not a good day Monday, and they just cram it Tuesday. And I'm looking for what's happened to Microsoft. Did their software go bad? I don't know. All I can tell you, this is the #1 weighting in the S&P and the NASDAQ 100. And you can see what I'm seeing. Google gaps up, fills the gap immediately. Amazon will be up a few this morning. Let's see where that's at. That'll just be right here. So all these big names now, I don't have a big uptrend anymore in the big names. I have a bunch. I have a bunch.
You just have them in restaurants and cannabis. And you know what? If this market gets rolling to the downside, and it already is, it's throwing the babies out with the bathwater. But we haven't even really. We're not even down 5%. But if we get rolling and take out 4,800, that's part of the reason I think that the golds came off, because it's a general liquidation, and you need a dollar peak to shift that. You have a view on the dollar here, Gary? And
I'll
interest
just show
rates?
the UUP. Right now it looks higher. But again, unfortunately, we have this interfering government of debt and deficits, and Powell, and I saw at 8:30 another 150 billion of treasuries. The trillions that they're going to have to replace in the next year while saying everything's okay is about as laughable as can be. And I wish I can put lipstick on the pig about what they're doing, but the numbers speak volumes. And I think the dollar going up has more to do with weakness elsewhere. Not so sure we're the greatest of greats. And just a couple more things, and then we'll open up whatever you want to talk. I watch MasterCard and Visa. MasterCard's now down 17 in the aftermarket. That's just the two important big names. Visa's already rolled over. And then we have some gaps to the upside. We have AstraZeneca, great looking gap. Eli Lilly, good reaction yesterday. Skechers, whatever they're selling, very good gap. I'm not going to shrug them off, and frankly, they'll all stay in my, on my screen because I love stocks that gap up, symbol TT. But I got to tell you, there is just a crap load of gaps to the downside also. And actually even more. And if you look at some of these moves, look at IT yesterday, which by the way is a technology research company. I don't know what's going on there. That's in my view. And also the software ETF. Here's your big top in place. Here is a much lower high, and don't break that. That's all I can tell you, because then you enter 200-day moving average, if not worse. So there is some good, but just weight of the evidence just keeps building. And the hope is for the bulls that somehow this gets the save in here. And we'll just take it day by day, play by play. We sold all our tech except for Meta on March 11th because of this day in the stocks right here. We sold our AMD right here. We sold our Taiwan Semiconductor right here. We did sell our NVIDIA at 850 and watched it go to 967, and we were pissed off. But now
that's the last time you were on.
Yeah, feeling better right now.
Yeah.
But just O'Neill always said, find good bases to buy off of, find good stocks that, you know, and there's just really not a lot of meat. I can tell you the big banks, you know, they have a relative strength, but V-shaped up, some of them, others not so good. And then I look at BlackRock and Blackstone with the bear flags on them, and Blackstone, you know, breaking down. So I always say, we'll see. I'm open to any and all outcomes. But as Marty Schwartz once said, we're just looking at a photo album for familiar faces. And this photo album has a lot of tops in place right now. And we're going to need some goal line stands in here. And who knows, you know, again, we get this guy at 2 o'clock, and who knows if he mentions, well, we're going to lower rates a point because we're worried about what's happening on college campuses or something. So, you know, beats the hell out of me.
I'm worried about what's happening on college campuses too.
I'm with you, buddy.
Okay.
Anything you want me to go ahead?
Yeah. So, you know, I think part of the picture is yields creeping back towards the highs. You have a view on TLT, perhaps. Okay, there's a 10-year.
And as I stated, how do bearish phases turn around? You have the bear, you flatten out, you get above the 50-day, and you retest it as the 50-day turns up, and then you break above. And now you stair step up, and we'll see, as we say, but all we can tell you, and we'll bring the Fed in, every tick up is tougher for the Fed to lower rates, because this is the free market. Jay Powell is not the free market. He's just the whims of one man, and hey, I'm going to do this or that. This right here is the trading and investing of big money, small money, investors, traders, and speculators about what's going on in the world. And I believe that first before I believe anything he does, though he had $9 trillion to print, which took rates down to zero, and you know what happened next. So absent him printing money again, the trend is up right now. I suspect if the transports are saying something, the trend better start heading down, because if the economy drops but interest rates go up, there is the market yelling stagflation.
Right.
Just remember, I believe in the market. I don't believe in opinion. I don't believe in pundits. I don't believe in predictions. I believe in the market being smart. And if interest rates keep ticking up as the economy heads south, that will be the definition of stagflation. And that is not a great scenario, because at that point, if the Fed lowers rates in order to help the economy, that will incite bigger inflation, and that'll be tougher to get away from. And then you enter what I believe to be one of those phases of no go. So we'll see. You know where I stand. There are some good stocks out there. I mean, Wingstop looks great, and I think it's up another $12 in the aftermarket. That's a big bull market. God bless them. There's
I don't like it.
okay. Chipotle.
Look at that volume bar there. Go back.
On which?
The wings.
Yeah, but it's going to gap up today, $12, and we'll see what happens.
Oh, it is 12.
Earnings,
all right.
Earnings this morning.
All right. Buy the rumor, sell the fact. There's massive divergence.
Yeah,
up here.
Chipotle
anyway.
looks great. This Kava group. I mean, there is strength out there. Domino's Pizza is strong. I'm showing you one group, Texas Roadhouse. So you got restaurants that are in good shape, and there's other areas that are in.
What miners were you long, and are you going to be looking to buy this pullback? I know I am.
I only got long the gold. I didn't get long the miners, gold. But I'm a big believer in relative strength in the miners. There's the HMY. I think IAG, but they're a little toppy in here.
Yeah.
KGC. Let them find their levels. I just went by my rules yesterday with the GLD, and believe me, I didn't want to sell it. But it broke the 21-day. Volume patterns are turning negative. I just think there's a lot of strife that can get gold turning up again. But I did what I did, took my profits, and
that's discipline, Gary.
That's all I can do.
That's discipline. So let me ask you this, and I know I'm a technician, you're a technician. We talk about the Fed and all of that. Isn't there potential for an exogenous event? I've been saying if you think what happened between Israel and Iran is a one-off, you're in a parallel universe. Passover ended yesterday. Are you worried about the geo risk in the Middle East and maybe even Ukraine now that we're sending long-range missiles to Ukraine?
Well, when you have students acting like terrorists and kidnapping janitors and blocking other students from going into a library, those are students. Imagine what the real bad people have up their sleeve. So I can't argue that point. I also worry about a financial event. Look, here is our debt. That's a chart of our debt. Right. That's a chart of our deficits. And I don't, this is a chart of interest on our debt. I don't know at one point the bond market wakes up and says, holy blank, and interest rates, regardless of inflation, go to 7%. We know economics 101. If you're a company that has too much debt and your business is going big time south and you need to float bonds, those bonds are going to be lower in price and the lenders are going to demand higher yields. Well, economics 101 on, so we'll see. Again, I really hope this plays out well, but I'm a big believer in numbers. I'm a big believer in facts. And man, oh man, there's some things that are just going the wrong way. I think the best thing they have going for them is 150 million of us going to work every day to do better for ourselves and our family. They disrespect us. You've got Biden coming out. Sorry to get political, but these are part of it. He's calling for a 44.6% long-term capital gains, up from 20. He's calling for a 25% unrealized gains. He's calling for 25% wealth tax. And if he gets those things through, holy
who's
crap.
going to want to trade? It's not worth the risk.
Oh my goodness. So, and maybe cooler heads prevail, but I just think let's call it clouds, and let's call it again, the technical condition of the S&P, a drop, a wedge, volume patterns negative, the NASDAQ, a drop, a wedge, volume patterns negative, the transports acting like the south end of a northbound jackass here. I can go on, but there are some good stocks, and we'll see what comes of it, and maybe we'll turn, but I don't think you're wrong. If we take out the low recently, that's going to invite some institutions to lop off a few more shares of stuff.
I'm still in the camp. This is a correction, and we get one more rally. But
I can't argue that.
Yeah. So and that's going to be that may be it. But anyway, you got to trade what you see today. Do the right thing today, and tomorrow takes care of itself. I don't have to worry about, we'll see it when this correction's over.
But just
to maybe
remember,
get long. Yeah,
just remember, corrections can be vicious. You don't
they
have to
can
have a
be.
you don't have to have a bear market to have your you know what handed to you if you sit in things. So
I'm
if
looking
we,
for a 28 VIX, Gary.
ooh, that'll be interesting. Let's take a look at the VIX. Yeah, and
So,
it's still
so
hanging in
basically,
here.
how you get there, you will take out that 21. You had basically, I don't know, an 8 handle move from 12 to almost 9,
Right.
21. We pulled back 78.6. So if we have another wave and it's 1.618, would be 13, 14 handles from 14 and a half gives you 28 and a half.
Got it.
Okay,
Yay.
so that's where I'm at. So
Yeah.
we'll see what happens. But I think then that's it for a while.
Yeah,
You got
and
to
again, there are some stocks sticking out for me. My best friend is always corrections and bearish phases because it'll separate the real big strength. And what they'll do towards the end of the correction, they'll stop going down when the correction is in the like the last leg of the move. They'll actually start moving higher. They'll start setting up, and the best ones will start busting out first, and we'll hope to be on them. I'm not so sure we're there yet. And again, we're just going to keep an eye on this, stay focused as all heck. If we're wrong, be wrong fast and small. And when right, hopefully you can ride them out for a couple of years. But right now, how crazy the markets is, that's kind of tough.
Okay, yeah, I agree with Kenneth, one of our attendees. Gary is clear and love to hear his thinking. And you know what, Gary? I have a feeling this was not natural when you started, and you had to learn to be a disciplined trader. Went through the having your teeth kicked in a few times until you had your new paradigm and you live by it, and you express what you think with conviction. So, was I right that you had to
I
go through
spent
some rough times?
I spent a few hours the other night going over the mistakes I made in the last 2 months.
Okay,
So
there you go. We're
you,
our own worst critics too,
we're the market is a constant learning process, but the bigger
Yeah,
learning process is ourselves.
yeah, you're right.
If I would have stuck to certain rules on size and stuff like that, I would have
Yeah,
been a lot better off in the last few months.
yeah,
But when all was said and done, we did okay, and we'll
yeah,
we'll we'll learn. I threw a few F-bombs at myself in my little diary to make sure I don't repeat. And again, we have to be our own biggest critics in anything we do in life, and
yeah.
we live by that rule.
Happiness is enjoying what you have instead of having what you want.
And I'm going to be a grandpa
Oh my
in
gosh.
early July, so I have another person to teach.
More. So yeah, more nachas, and congratulations to you, Gary. Yeah,
Thank
I
you.
mean Gramps. Uh,
Yeah.
s- Thanks for hanging out with me today and our whole community, Gary. Appreciate you over the years. We've been talking a few years now, haven't we?
Yeah, I do believe so. And may I say, Dale, it's an absolute privilege. I do appreciate anybody asking.
Okay, and it's really so get a hold of Gary on X. You just use his name at Gary Kaltbaum, Kaltbaum. He's an RIA. He handles managed funds, and so if you like what he says, he says what he does, give him a call, check him out, and appreciate you being here, Gary, my trading warrior brother.
Until next time, thank you.
All right, Gary Kaltbaum, everybody. My trading warrior brother, guys out there, has discipline and definitely, does not let judgment get in the way of the king. And that king is price action. So that's a wrap, everyone. Remember, don't just count your bar charts or candles and all that other stuff. Count your blessings. You're welcome, Lorena, Sinatra. Join the team. Take Blake's suggestion. and make May pay. Adios.